time now for the markets with Layton. And Layton, of course, it's harvest time down in South America,
right.
And you say that the reports are not as good.
That's right. That crop may be continuing to get smaller. We'll talk about what that may mean to producers here in the United States in a moment with John Michael Riley. Also ahead this week, U.S. ethanol plants may have to schedule some stop downs. The beef sector worries if there's another liquidation. And chicken and corn prices help the poultry business in Mississippi and elsewhere. As we produce this edition on Thursday morning, most grain contracts were trading lower. Extension Ag economist Dr. John Michael Riley joined me to discuss what the month of June may bring as far as corn and soybean prices. John Michael, let's begin on the export front. How are those numbers looking as far as corn and soybeans?
Well, this continues to look a little bit more dismal than where we were at of course, this time last year, but even just a few weeks ago. We have seen the dollar strengthen, which makes our goods a bit more expensive to our friends overseas. So over the past couple of export reports, weekly export reports, we've seen more people throwing their hands in the air saying enough's enough and kind of backing off the numbers that we were expecting to see. So exports are a bit more dismal than especially where we were at last year.
Is the situation we hear so much about in Europe and Greece, is that economic problem, is that impacting, is that being reflected in these export numbers? Well,
that's having an impact on the euro, which makes the dollar stronger compared to the euro, but it does have some psychological impacts in terms of the global economy, and there is a lot of fears about what widespread potential could fall out of the European crisis.
All right, so often we talk about the weather, of course, in agriculture, and here a lot of rain, some showers over the Mid-South late this week. Is that going to be reflected in the market as far as where prices go anytime soon?
It doesn't appear to be because those rains haven't reached further north, and right now it's quite the soap opera as it relates to corn and soybean markets, as mainly due to the weather. Dryness and heat across the Corn Belt has really got everyone worried about what this is going to do to yields for this crop that really got in early, and the earliness of the planting has puts a lot of pressure on both of these crops. But now where this dry weather that we're experiencing is starting to reflect in the prices. We're starting to see prices move a little higher, but that's really the focal point is the Corn Belt, and they're not getting the rain, and they're dry and they're hot.
Well, we're kind of seeing, as you mentioned before, stronger dollar, weaker commodity prices. Are we kind of setting the stage for the summer here? What may be the outlook?
That's $1 million question. Everybody wants to know, and if I knew the answer, the exact answer,
you wouldn't be here.
Exactly. But the European issue is one that we're having to deal with. In the U.S. economy, we're seeing pockets of good news, but it always seems to come around to some negative news. So we're going to be on a roller coaster ride for the rest of the year, I'm afraid.
So the word would be volatile commodity prices.
Oh, I think so. That's been the norm here lately.
Tight supplies of old crop corn will continue to make this what the ethanol industry is describing as a challenging year. One recent analysis estimates that ethanol plants will not be able to pay more than $6.75 per bushel for corn this summer without running into the red and risking a complete shutdown. One DTN trader says he wouldn't be surprised if some ethanol plants schedule 2-week shutdowns while doing maintenance in order to maximize margins and stretch the corn that they do have access to. Well, to move us towards the livestock portion of the markets, look at our trivia quiz. June is Dairy Month, so our question is, how does Mississippi rank nationally in the number of licensed dairy farms? The answer is one of these: number 9, number 17, number 23, or number 36. I'll tell you in a few more minutes. The domestic consumer is one of several concerns in the beef sector as we head into the month of June. Another potential problem is that the stronger dollar is bringing Australian beef into the United States. But analyst Sue Martin says there are other looming issues on her mind, too.
Another thing is the weather. What happens to these pastures? We have to watch the conditions of pastures, because if they go south on us, we have no place to go with these cattle. The pastures in the south are not good, so therefore you're going to see another round of liquidation. And this time, with concerns over a slowing global economy, plus on top of it a dollar that's lifting and bringing more meat in. A year ago we weren't bringing meat in. Now you've got a problem this time when if you see more cow liquidation, you're going to have a problem because it's more meat being put onto the marketplace, and cattle are carrying more weight.
Laurel-based Sanderson Farms reports that its second quarter of the fiscal year reflects improved market conditions for the chicken industry. Chairman and CEO Joe Sanderson Jr. says that net sales were over 24% higher than a year ago. Sanderson attributes the improvement to higher chicken prices and lower corn prices. Now, overall, the company reports that retail and export demand for chicken has remained steady, while casual dining and food service demand has remained soft. Because of an expected volatile grain market, Sanderson has priced its corn needs through July and has priced its soybean meal needs through the month of June. Well, for the other white meat, pork, the profit picture is not looking so bright these days. The strengthening dollar makes the cash price for pork needing to come back down, according to analyst Naomi Bloom. However, she notes that since pork has already been down some, that's actually turned out good as far as the all-important foreign sales picture.
That's why the export market has been able to hang in there, because that pork price has been down. And at one time we had the values under 80 cents, but now they've come back to about 82.5, which is really encouraging. The export market is coming back. It's not what it was, a year ago, because China and South Korea are rebuilding their herds now, and they just don't need our product quite as much. But at the same time, with the Father's Day holiday and 4th of July, the demand is coming back. And so we'll most likely see a decent bounce here. It's had a 2-week rally.
Let's take a quick look at the trivia answer as we wrap up the markets for another week. D is the correct answer. Mississippi ranks 36th in the country in the number of licensed dairy farms.